$4,500 a month. In New York, that gets you a 500 square foot box above a loud street. In Dubai, it's a high-rise, a maid, and a pool. The math looks obvious, right? But honestly, you are working with information that's already out of date. There is a new tax trap in Dubai that most people relocating there right now have no idea about. And yeah, there are hidden costs in New York that your salary calculator never accounts for. Here is what the numbers actually look like in 2026. Let's start with the number that controls everything else: your housing cost. In 2026, a one-bedroom in central New York, Manhattan, Brooklyn, close to Midtown, runs $3,500 to $4,500 a month. To live there without financial stress, your post-tax income needs to be at least $130,000 a year. That is the floor, not the ceiling. Dubai. Same one-bedroom, prime location. Downtown, the Marina, Business Bay. Averages around $2,200 a month. That's roughly 50% cheaper for infrastructure that in most cases is 10 to 15 years newer than what you are renting in Manhattan. So far, Dubai looks like an obvious financial win. But here is what real estate brokers completely leave out of the conversation. In New York, you pay monthly. 12 payments over 12 months. Standard. In Dubai, the traditional rental structure requires your entire year's rent up front in 1 to 4 post-dated checks. That $2,200 apartment, you may need to hand over $26,400 in cash on the day you sign the lease, before you move a single piece of furniture in. For anyone relocating from the West, that is a financial wall that stops the move before it starts. Your Dubai savings plan does not begin on month 1. It begins after you clear that barrier. The monthly rent is cheaper. The entry cost is brutal. Know the difference before you make the decision, and rent is only your starting point. What actually determines your financial life in either city is what the government takes before you even see your paycheck. And what you have been told about Dubai's taxes is at least 2 years out of date. This is where most Dubai videos make their first and biggest mistake. They tell you half the tax story and stop there. New York is genuinely brutal. If you earn $200,000 as an entrepreneur or high-income professional in New York City, here is what actually happens to that money. Federal income tax takes 37% above the top bracket. New York State adds 10.9%. New York City then adds 3.876% on top of that. By the time all 3 layers are done with you, you are taking home roughly $130,000. You earned $200,000 and kept $130,000. You handed $70,000 to 3 levels of government just for the privilege of waking up there. Dubai, 0% personal income tax. You earn $200,000, you keep $200,000. Every dollar. That is the version of the story that fills YouTube. And it is completely true. For personal income. But here is the conversation that is not happening loudly enough. Imagine you made the move. You relocated. You set up your business. Month 1, you are keeping everything. Month 6, the business is growing. Then your accountant calls. Because since June 2023, the UAE enforces a 9% corporate tax on business profits above 375,000 dirhams. That's roughly 102,000 US dollars. Cross that line and the government takes 9% of everything above it. Freelancer, solo creator, small operator staying under that threshold, you are fine. But if you are scaling a real business, the era of the zero-tax corporate free-for-all in Dubai is officially over. In 2025, the UAE added a 15% domestic minimum top-up tax for large multinationals to align with global minimum tax standards. Dubai is tightening. It is still dramatically better than New York's combined 21% corporate rate. But it is not the Wild West people were selling you in 2021. The personal income advantage is enormous and real. The business tax advantage is real but shrinking. Know which one applies to you before you pack a single box. Taxes tell you what the government takes. But there is a second drain that nobody puts in the spreadsheet. And in both cities, it is quietly destroying budgets that look perfectly healthy on paper. Taxes and rent are, the numbers everyone compares. But both cities have a third drain that quietly destroys budgets that look healthy on paper: the cost of just staying alive. So let's start with New York. Groceries and dining carry a premium most people severely underestimate before they arrive. High commercial rents, high labor costs, and an 8.88% sales tax on dining mean a basic meal at a mid-range restaurant costs $30 to $40 before tip. And tipping in New York is not optional. It is a social contract. You need to budget 20% on every meal, every time, without exception. Dubai has a 5% VAT, significantly lower. Day-to-day basics are genuinely cheap. But Dubai is a desert that imports roughly 80% of its food. Anything sourced from Europe or the US carries an import premium that will surprise you on your first supermarket run. But the real hidden cost in Dubai is the one almost nobody factors into their relocation budget: utilities. In New York, your heating bill spikes in winter, uncomfortable, but seasonal. In Dubai, your air conditioning runs at full power for 8 straight months, not because you want it to, but because without it, the indoor temperature becomes dangerous. Your DUA electricity bill and Empower District cooling charges combined add $300 to $500 every single month on top of your rent. That is $3,600 to $6,000 per year that never appears in the comparison spreadsheets. Then there's internet. New York Fiber, around $60 a month. Dubai has one state-monopolized telecom provider, minimal competition, and charges $110 to $120 a month for the same speed. Every month, permanently. You save enormously on taxes. You bleed steadily through lifestyle maintenance. The net advantage is still real, but it is smaller than the headline numbers suggest, and it compounds the longer you stay. All of this only matters if the city you choose actually gives you the income to make the math work. And that brings us to the question nobody asks loudly enough. Which city gives you the higher ceiling to earn from in the first place? Everything we have covered, rent, taxes, hidden costs, is noise if the city you choose cannot give you the income to make the math work. So let's talk about the ceiling. New York is arguably the financial capital of the world, not as a cliche, in a precise, measurable sense. The concentration of venture capital, institutional investment, legacy media, and Fortune 500 decision-makers within 5 miles of Midtown Manhattan does not exist anywhere else on Earth at the same density. If you are raising $10 million for a technology startup, if you need a room with the people who can write that check, if your business depends on proximity to the most powerful economic networks ever assembled, New York is not just a good option. For that specific purpose, it is the only option. The taxes you pay in New York are not just a penalty, they are a cover charge. You are paying for access to the biggest room in the world. Whether that cover charge is worth it depends entirely on what you do once you are inside. Dubai's proposition is different and equally legitimate. Dubai is the capital of new money and rapid scaling. The UAE government is one of the most aggressive in the world at attracting the industries of the next decade: cryptocurrency infrastructure, e-commerce, real estate investment. Dubai is also objectively one of the safest cities on Earth. Virtually zero violent crime. Infrastructure that functions. A quality of daily life that New York, for all its opportunity, genuinely cannot match. And geographically, Dubai sits within an 8-hour flight of virtually every major economy in the world. Europe, Asia, Africa, South Asia, all reachable within a single business day. For anyone running a global operation, that positioning alone is worth more than any tax saving. But here is the honest limitation. The UAE domestic market is under 10 million people. A business built in Dubai must be designed to serve the world from day one, because the local customer base alone will never sustain real scale. New York gives you access to the largest single consumer market on Earth within city limits. Dubai gives you access to the world, but only if you build something designed to reach it. So, which city actually wins? The answer depends entirely on one specific thing about where you are right now. And most people get this completely wrong when they make the decision. Here is the conclusion. Not which city is better. That is the wrong question entirely. The right question is, which phase of wealth creation are you currently in? New York is where you go to build wealth from zero, to raise capital, access networks that exist nowhere else, and compete in the hardest, most lucrative market on earth. You will be taxed heavily. You will pay that willingly, because the room you are buying access to is genuinely worth it at the right stage. Dubai is where you go to protect and multiply wealth you have already built. To eliminate the income tax drag on money you are already earning, maximize your quality of life, and position yourself at the geographic center of a century that will be defined by Asia, Africa, and the Middle East. It is not New York versus Dubai. It is which chapter of your financial story you are currently writing. If you are in Chapter 1, building, raising, networking, establishing, New York is your city. If you are in Chapter 2, scaling, preserving, optimizing, Dubai is your city. Know your chapter. Next week, Singapore versus Monaco. 2 zero-tax countries. Completely different entry requirements, completely different outcomes. One is dramatically more accessible than most people think. Subscribe so you do not miss it.